Every week, somebody tells me the same thing. They're waiting for the rates to drop before they buy. But here's what nobody's telling you. Waiting might be the most expensive decision that you make this entire year because the math doesn't add up on waiting and it's not even close. Today, what we're gonna do is we're gonna break down 5 myths and the actual facts that go with them surrounding rates and what I hear about them on a regular basis. If you're on the fence about buying or you're thinking about it, this episode's for you. Welcome to Tom Talks. Let's dive in. Myth number 1. Rates are about to plummet, so I'm gonna wait. I've got real facts in front of me right here, and let's go through the numbers because those myths aren't adding up. Let's go through the facts. The Mortgage Bankers Association, they're projecting the 30-year rate at 6.4 to 6.5. I'm looking at them right now. Through the end of 2026. Fannie Mae's, that lines up almost exactly the same. They're coming in right now at about 6.4 through the end of this year. So no major forecaster that's doing this, the industry experts, are projecting any type of dramatic drop on board. In fact, a year ago, I'm filming this in July of 2026, a year ago, we were at 6.74. Today, we're at 6.58. That's only a 16 basis point drop. That's not significant. That big drop that everybody's waiting for, it's not showing up in the real numbers. Waiting for the free fall is waiting for something that the data is just not going to support. There is not a single real expert who does this on a regular basis who is projecting any significant drop. The rates that we saw a few years ago, which we'll get into that on another myth, those aren't coming back. So waiting, all it's doing is costing you significant equity as those property values continue to increase year over year. By the way, guys, if we haven't met yet, my name's Tom Worley. I'm a Hoboken-based real estate advisor. I'm a fire captain here in Hoboken. I'm a father. This is what I do. I've been in the industry for 14 years, helping buyers and sellers navigate the real estate market day in and day out in northern New Jersey. So if you find this information useful, hit that subscribe button. Make sure to follow along for more educational content. As a former teacher myself in a past life, I value this education process, and I found that the earlier it starts, the smoother the transaction is going to be. So hit that subscribe button for more informational content just like this, as well as home tours on a regular basis. And if you have any questions, you can reach out to the number on your screen, or you can schedule a strategy session in the link in the description of this video. Myth number 2, when rates finally drop, homes are gonna be more affordable. Let's debunk that right now. The Federal Housing Finance Agency, their housing price index I'm looking at right now, as of April of 2026, they had home prices up 2% year over year, right? So prices rose in 42 of 50 states in this country. So let's do the math real quick. A $500,000 home appreciation at 2% is $10,000 more expensive after a year with just that 2% increase. On a 15 basis point drop, that's about $35 per month. That math speaks for itself. So that $10,000 appreciation that you're missing out on waiting for that significant drop, it's just not going to add up. The National Association of Realtors projects that the median home prices for this year are gonna rise by 4%. So as prices keep climbing, inventory growth is still kind of remaining minimal. We are still seeing a significant inventory shortage. So that small rate dip, what that's going to realistically do is pull more people off of the sidelines and back into the market. And it's going to create more demand for the homes that actually are hitting the market, which we're going to see more bidding wars and continue to drive that price up. So again, back to that original point, that math of waiting, it's just not going to add up if things continue the way that they have been. We are looking at 14 consecutive years of positive appreciation on homes. What you're waiting for is not going to be there. You're not looking at, nobody's projecting any significant drop in the home prices or those rates, causing those property values to continue to rise and you continue to lose out on equity. Myth number 3, even a small drop in rate is going to save me a fortune on my monthly payments. We rewind back to what I kind of ended myth 2 on. We've seen a drop of 16 basis points over the course of the last 12 months. So on a median price home, that's again roughly $35 per month. as opposed to the $10,000 increase. So at $35 a month, you're at $420 a year. The average increase of your home value is $10,000. $420 a month, or a year, I'm sorry, $420 a year, $10,000 a year. That math is not adding up. That monthly payment that you're obsessing over, that's going to be dwarfed by the equity that you're going to gain. And again, as those rates do come down, prices are going to continue to get driven up, because as rates come down, people are getting driven off the sidelines. So that's the real math behind this. That what people aren't realizing is when they think about the cheaper mortgage rate equals a lower monthly payment, you're not thinking of the other side of the equation and how many people that draws off of the sideline and how many people have been waiting to get into the market for the same reason. Myth number 4, waiting means less competition once those rates start to ease a little bit. As the rates ease, your affordability may go up a little bit. But again, back to those other points, as your affordability goes up, so does everybody else's. So they're coming off of the sidelines. So let's take a look at what that means for where the mortgage rates currently are and the people that are currently holding a mortgage. Roughly 80% of outstanding US, I'm reading this directly from stats, 80% of outstanding US mortgages are locked below 6%. 80% of mortgages right now are below 6%. Over 50% of those are below 4% from those artificially low rates back a few years ago in 2020 and things like that, right? That was a life event that caused the rates to come down. And what people did was they got that lock-in effect. They bought homes then, and now the reality is I'm talking to sellers all the time that absolutely hate their home, but they're afraid to trade that rate. So they're stuck there. So as those rates continue to come down and they feel more and more comfortable getting rid of that sub 4 rate, because now all of a sudden they've had time to wrap their head around rates are going to be around 6%, 6.5% at the end of the year. They wrap their head around that, they come off the sidelines. That's another buyer in the buyer pool. More inventory, sure, but another buyer in the buyer pool. More competition means more bidding wars, means more frustration for you as a home buyer, and more stress for you as a home buyer as you try to navigate all of the bidding wars that are going to go on as rates ease. So the reality is, while your affordability goes up, your competition goes through the roof. And that's what, again, another side of the equation that people aren't necessarily thinking about. Myth number 5 is that rates in the 6s is historically high. I have to wait for these things to come down. I should wait to be back at a 3 or a 4. Here's the fact. The 50-year, 30-year fixed over the last 50 years, that average is 7.7%. 7.7 is what I'm looking at right here. So those sub 3 and 4% rates that we saw in 2020 and 2021, those were outliers, right? Those were built on a generational shift in the economic landscape, right? And as I talked about in myth 1, the overwhelming majority of economists are projecting rates this year to average in the low 6s to mid 6s. That gradual shift over a couple of years into the high 5s, that's a reasonable expectation. But getting back to those 3 or 4, what you're betting on is a significant disruption in the economic landscape again, which frankly is not on anybody's radar right now. So waiting for that is just going to keep you on the sidelines indefinitely. The lowest projection that I've seen is the National Association of Realtors chief economist is saying that 2026 will average around the 6% mark, where the other half of those, right, the other group of people that are projecting this are saying that it's more realistic to average in that low to mid 6 range. And that's a reasonable number, comparatively speaking, to the 7.7% that the 30-year fixed has averaged over the last 50 years. Those 3 and 4s, they were tied to a specific, unusual, ridiculously unusual economic landscape. So anchoring your plans to a number from a different economic era, all that's going to do for you is keep you on the sidelines indefinitely. All of this information is not to say that you should necessarily rush into buying a home. What it is for you to take it in and make sure that the decision to buy the home is not tied to a rate that isn't coming back. If buying a home and the numbers work for your life right now, then start the conversation with somebody you trust, with a local advisor. If you want to reach out to me, you can text the number on your screen. I'm happy to start that conversation now. But don't try and time a market that even the professional economists can't time. Take a look at the facts, figure out what works for your life situation right now and what your real estate goals are, and make the decision based on that. Because the savings that you're going to see if rates come down is going to be outweighed by the equity that you will gain by buying now. So again, lower rates equals more competition, not less. More buyers come off of the sideline, more bidding wars, more frustration. Educating yourself on the entire picture of the market and what your real estate goals are is going to make that such a smoother transaction to get you across the finish line for your real estate goals. I'm Tom Worley. I'm a 14-year advisor. If this is something that you find use out of and you found this helpful, hit that subscribe button, follow along for more educational content, home tours, and market insights. Send this to somebody you think needs to see it, and stay tuned for the next episode of Tom Talks.